Anyway, I thought the most important thing, so I'll go ahead and just get started now, but the most important thing that I feel like when you're analyzing a market or looking at the statistics for what's going to happen next year is kind of closing out what happened last year. Where are we now? Where are we ending 2024 and going into 25? So what I wanted to focus on, where I found some key data points that I thought were super interesting, very surprising in some cases of where we ended the market. And I know that we all kind of thought leaving 23 going into 24, that we were going to have a little bit different year than we did, but some pretty eye-opening stats that I wanted to share with everybody. So the first one is the median home buyer age. Median home buyer age went from 49 years old to 56 years, an all-time high last year. So what we're seeing in the market, affordability is still one of the most difficult things that we're seeing out there. And it is the buyers getting older and wealthier than what we've seen end in 2024. So I thought that was a really interesting statistic. The first time buyer median age went from 35 to 38. I have a buyer the other day that called me and she was so worried that she was 30, she just turned 37. She's so worried that she was so behind the trend. And I told her, you're right on target. So this to me is one of my biggest soft spots, first time home buyers. What I want to find ways to get more younger generation first time home buyers in homes. So that's going to be kind of a goal of mine personally, but we've got to know the data to make that happen. So the next thing, 73% of buyers did not even have a child in their home under the year of 18. So some had older kids, multi-generational, but 73% of buyers didn't even have kids. That was an all-time high. The next one, 26% of all transactions last year were cash buyers. That is an all-time high too. And a lot of that we'll see because there's so much equity in people's homes, they were able to cash out and buy into a new home if they downsized or just buying investment properties. But that's an all-time high. We have 17% of buyers purchased a multi-generational home. So that shows you with affordability, people are finding ways. They're maybe moving in with kids or parents or grandparents, but it is something that we need to be cognizant of that is on the rise. That's the highest record ever. The next thing, this is the one that I was talking about, the first time home buyers was 32% in 23, only 24% this year. And at some point we were forecasted to be almost 50% first time home buyers was supposed to be where this market was going. But now it's at an all-time low. So this is what I'm saying we need to focus on, trying to get more first time home buyers able to be in a home. This was another great stat that I saw from the year 2000 to 08. The tenure for home buyers to be in a home was 6 years, and now it's 10. So people are just moving out slower. Of course, this last year we had so much pent up demand because people were waiting for rates to come down and home prices to come down. So now it's 10 years. For sale by owners, this is the one I wanted to also focus on because of the whole NAR thing. I think a lot of people were worried we were going to have so many FSBOs out there, but only 6% of all sales were for sale by owner. So I think that we're kind of getting over this hump. I mean, it's still an interesting market with the whole NAR settlement, but only 6% of sales were FSBOs. So now that we've kind of talked through where the market ended in 24 and some of those unique things, I think the biggest takeaways are that home prices are high, affordability is a little difficult. Rates were supposed to be coming down faster from what the Feds had told us going into 24, then they really ended up going down. Inventory levels and we'll talk about this too in a minute. Inventory has gone up. Our months of supply is still at a healthy level. We're just not used to it. We just need to get more buyers out there buying. And there's a lot of pent up demand right now. And I think people are starting to finally realize that we're kind of coming into this new norm the way the market is. And there will be more people out there that have kids that have 4 kids now and only 3 bedrooms and then they have to move up, or maybe that have a 4 bedroom home and they're empty nesters now and need to move downsize. So we'll start to see some of that, but there's been so much pent up demand. So let's go into 2025 and what we're expecting to happen. So the things I'm going to focus on today are where are rates going? Will more homes sell in 25? What is our expectation for the sales? And what is going to happen with home prices in 25? So those are the 3 things we're going to focus on today. So first, we're going to go into where are rates going? So this was from the chief economist with NAR, Lawrence Yun. Are we going back to 4%? Per his forecast, unfortunately not. We will not be going back to 4. It's more likely that we'll be going back to about 6. The new norm will be bouncing between 5.5 and 6.5. So this is his forecast. Again, there are some really high-level economists that have studied this market. And with everything that's gone on in the past year, this is likely we'll probably hit this. We're going to, in the fourth quarter of 24, where we're ending right now, we're just under 7. So I think by the end of this year, the thought is that we'll probably maybe be just under 6. So not quite a full point, but in that range. It's going to probably bounce around between the high 5s and the low 6s by the end of this year going into next year, or sorry, by the end of 25 going into 26. So let's look at some other statistics here. This is going to be from several of the different analysts or big markets out there. So they're saying by the end of Q4, their numbers were a little bit higher than this right now, but we are just under 7. And so they're looking at this as a slow decline of about to still end the end of this year. And if you look at here's the average, we're still going to be a little higher than this, than the 6.67. We're ending this year probably around 6.8, but we're going to be here. So maybe about a half a point or so by the end of 25. But it could go like he said, we'll probably bounce up and down. This might be the average though. So I think this is important for us to know and be able to talk to our clients about, because a lot of people think that rates are going to be coming down because that's what even the feds have said, right? Today is a Fed meeting. They're supposed to decrease the rates by a quarter point. My guess, and I could ask you guys what you think too, but my guess is we're actually not going to see any movement today. We've already planned on that. 97% chance was the chance that the feds are going to decrease it. So we've already seen that in mortgage rates, because remember the Fed funds rate is not an exact, that's not exactly what will happen with mortgage rates. It's similar. They'll have the similar movement, but they're not, that doesn't determine mortgage rates. So most likely we're going to stay right around here ending this year. And the feds have said next year they're going to take it down about another point. But that doesn't necessarily mean that the interest rate market's going to go there. So what we have to do is we need to coach our clients and show them there's so many more factors. There's the job numbers, there's inflation. So there's so many things that drive mortgage rates. All of the economists are saying we're going to get down into the low 6s probably, but we need our clients to know that we're kind of starting to get to the new norm. We're not going to be 3s again. So we need people to kind of know, especially the ones that are pent up waiting, we need them to understand what these numbers look like. So let's just look at a quick payment estimator. So if you had a client last year, maybe when rates were around 7.25, and let's say they were qualified at 570, so 38.88. And now let's say we get closer to about 6.5 in the next several months. So at that point, we have 38.88 down to 36.03. That's right about 285. So $285 left. We need to be able to quickly do those calculations for them so that we can help them see where the prices are, what price range they can be in, and what that decline looks like for them to see how much more they can afford now. because they may have decided to wait. While it might not be, down in the fours again, it's still a decrease that we need to be able to help them see what can you afford and what does the interest rate look like now for where you're at. Okay, so we talked about rates, new norm, 5.5 to 6.5. Let's talk about home sales in 25 and where the forecast is for that. So from Redfin, they said we expect existing home sales to tick up next year, ending 2025 at an annualized rate between 4.1 and 4.4 million. That represents a year-over-year increase between 2 and 9%. We're presenting an unusually wide sales range this year because while housing costs may price out some would-be buyers, there's also a fair amount of pent-up demand in the market. So that pent-up demand is what I'm talking about. Some buyers are not going to have an option. They're going to have to move for more space or less space or whatever the reason is. So this that we're talking about, this was the existing home sales. When you look at total home sales, let's look at that. So this is going to be existing and new builds. And where we're going to end this year is about 4.6 million sales. Next year, the forecast is about 10% higher. Now, we looked on that previous slide, the existing home sales are going to be a little bit less because inventory for new homes has actually caught up a little bit more. Now, that's nationally, and depending on what market you're in, it might be, depending on, like in some counties, it's going to be a little lower than others for new homes because they're built out. But overall, about a 10% increase in home sales next year from where we ended this year. So let's look at, this is going to be months of supply. This is kind of a good statistic for, I think, agents to look at too, because when we look at months of inventory, I think a lot of people we've not been used to the amount of inventory we have now. We're still in a very healthy zone though. If you look at this red line, that's going to be existing homes. So inventory for existing homes has been very low. People are waiting. They don't want to move. They like their 3% interest rate. But we have started to see that increase. I think people are starting to realize they've been waiting too long. They've got to move. So that is started, but it will continue to go up. So this is where, as a listing agent, it's going to be important for you to know what these numbers are in the statistics so you can try to capture more of that business. Now, new homes, new builds, that inventory has gone up even more, but that's still at a very healthy level. This is not at too high of a level. I think it was making, builders nervous, but back to where we were in 2008, especially, we're at better levels than that. So this will be important for you to know that, to try to capture some of those existing home sales, depending on especially the market you're in. This was just some interesting data that I wanted to call out. So when you look at existing home sales all the way back to 1995, and you look at where we ended this year, it's almost the same. In 1995, I think in the whole US, we had about 3.9 million in sales, and that's about exactly where we're ending existing home sales in 2024, which is kind of nuts when you look at how many more people are in the United States. And the census reported 70 million, but that could be almost another 20 to 30 million that we don't even know about. But that many million people increase, we know that the pent-up demand is big. So we just have to be prepared to navigate our clients through all of that. All right, so now we talked about rates, new norm, 5.5 to 6.5. We talked about home sales most likely going up to about 10% over where we ended this year. Okay, so we know there's more sales opportunity out there. Now let's talk about home prices. We've had people tell us, oh, we're waiting. We know there's a bubble. The home prices are going to be lower than they were before at some point because we can't sustain this growth. But let's look at this. So Redfin, again, they said prices will rise at a pace similar to that of the second half of 2024 because we don't expect there to be enough new inventory to meet demand. Again, remember the population that we've seen, the pent-up demand we have, even with higher inventory levels, we're not going to be able to meet that. So when you have supply and demand, that's what determines the prices. Okay, so now this is one of those statistics that you can show your client. So your client says to you, no, I'm going to wait. I still think that home prices are going to come down. And you say, okay, well, why do you think that? Oh, because I was talking to my CPA or I was talking to my grandpa or whatever, and they said that there's just no way that we can sustain this. But then we can show them this. These are all some of the smartest economists out there. Every single one of them is showing positive appreciation except one. And when you take the average of all of these, it's showing about 3.1%. Now, again, this is nationally. When you look at just DFW, we were forecasted going into 24, we were forecasted number 2 in the highest pent up demand markets coming into 2024. And we know sales were okay, but we still have so much pent up demand that we don't really know. This could end up being even higher. Now, with the more stable interest rate, not going down too high, people getting used to the norm, it's probably not going to be a crazy, like we were in 2021, hopefully. But the likelihood we're going to see positive appreciation is very high. And so one thing that, just to share with our clients, and I do this all the time, I like to show them, okay, if we have a $500,000 home and in just 1 year, we have just the average that we're expecting, a 3.1%. So we take this, that home is worth 515,000 in just 1 year. So anyone waiting to buy the next year, even with a very, very conservative appreciation forecast, that home, if they wait 1 more year, is going to be another $15,000. So this is where we really need to explain everything to our clients and show them where rates are. It's not going to be any crazy drops where we were, how much homes cost, and really what the appreciation factor is going to look like the more we wait. So they could get into an asset now that will grow for them, but maybe it needs to be in a price point that we have to look at just so that it's more affordable for them. And again, a lot of people are like the multi-generational, there's different things out there. So we really have to listen to our clients to see what they're looking for and what the options might be for them. Okay, so the next thing I want to look at is with the recent house price increases, some people are worried about a new housing bubble, like we just talked about, but mortgage debt isn't a concern. And lending standards are much better now than during the bubble. So this is going back to the people thinking that what's happened in 08 is about to happen again at some point, but that's not where we are. We have so much higher population. We have the inventory levels have just started to get a little bit better. And we have lending practices that are protecting us. So when you look at all that, the other thing I wanted to show you is the equity that people have in their homes compared to the mortgage debt is so much different. So anyone that already owns a home, their home has gone up in equity so much, but mortgage debt has hardly increased at all. So a lot of people have this equity, and especially when we're looking at homeowners that already own a home, being able to downsize or upsize and move up and getting them over the hump of knowing that we're not going to have a bubble and mortgage rates aren't going to get back to 3%. This is where we can coach them through and show them that they have the equity, even if they're going to be using it on a new purchase. We're not going to be in a big bubble like we had been before in 08. So this is one of the biggest things I think that we need to share with them. So now, just to kind of recap all of this, and I can send you any of these slides if you want them, let me know. Most agents know what's happening globally. They kind of have an idea of what's happening, but good agents understand, and this is David Childers' KCM quote. He always says this at every one of his meetings, but good agents understand what is happening, but only great agents can explain it. And so that's what we need to be able to do with our clients is explain all of this, show them the data, show them the statistics so that they really understand where the market's going, where we've been, even if it's not the most ideal market, it's the facts and people have to buy and sell all the time. So we need to help guide them through that. So again, just kind of going back to where we kind of started here, the oops, when we're talking with our clients high level, where are rates going? Rates are going to be coming down slightly between 5.5% and 6.5%, maybe up to 1 point this year, probably a little slower than that, but we are kind of bouncing around the new norm in that 6% range. Will home prices sell, or will more homes sell next year in 2025? Yes. We're expecting about a 10% increase overall. A lot of that being new inventory will be a little larger chunk than existing inventory, but it will be going up. And then lastly, what is happening with home prices? We're seeing about a 3.1% appreciation value. Some markets will be a little bit different than that, but that will be the average. We are not going to have a housing crisis or values coming down. It's still a safe market to buy in. And these are the things that we can explain to them. So I hope this was helpful. Like I said, reach out to me if you want to see any of the slides or need any of this data. I'm also happy to do this presentation. I've had a couple people that wanted me to do it with their team. Happy to do that as well. Just let me know. But I hope this was helpful for you. And I hope you guys all have a very Merry Christmas.
Thanks so much, Tracy.
You're welcome. Thank you. Good to see you.
You too.
All right. All right. Bye, everybody.